Hello everybody, welcome back to this educational video. So today I'm going to be showing you how I take some of my trades using the confluence of trend line and structure. So we are going to be looking at trend line and structure, especially trend line, and how it plays out, how I was able to get my trades and then get a risk reward of 1:58 on gold. It was a trade I took yesterday and I held till I think around 4 or 5 today. So let's dive into it. First of all, let me show you the trade. So this was the trade when I my bias for gold. So this was when it has hit take profit. So this one was for GU. This was when it has hit take profit. This one was for USDJPY. So I posted this trade on my journal list. So this was USDJPY when I posted it, and this was when it has actually played out. So I'm going to be showing you how I take these trades. So I'm actually recording on my phone, so pardon me. So this is gold. This was gold, and then if we look at the daily time frame, let's look at the daily time frame and get the overall picture of gold. So we can see that gold was clearly on an uptrend. So we can see the rally to the upside, and we can see the rally, how gold was rallying to the upside. So we want to be looking for buys, instead of sells, except maybe you just want to be taking short time sales. So for me, I want to be looking at taking buys, because when you trade with the trend, right, you don't trade against the trend. So this is on 1 day, like daily time frame, just to get the clearer picture. Then we'll go to the 4 hours time frame, trying to narrow down gold. So this was it. So we can see that from what we can see here, we can spot a break of structure here, right? We can see a break of structure here. So, and after this break of structure, we can see price rallied to the upside. And then we can see this low that was created here before this break of structure. We can see this low that was created before the break of structure. So we can see that price came back to mitigate that low, but didn't break the low. Actually, we can see that low being maintained. Okay, so telling us that the buyers are actually trying to gather more momentum to push this price, the price of the market, or the price of gold up. So we can see this low being maintained, and then what then happened after this low was mitigated, price rallied back to the upside. Then after that, price came back down and rally, because clearly it was on an uptrend. So it was rallying, rally, drop, rally, drop, rally. So, and then we can see this low again being maintained. So if we go to 1 hour time frame and try to keep it simple, so we can see this low that was maintained, so telling us that price is trying to build what momentum to push price up. So we can see this low being maintained, and we can also spot what another break of structure here. Okay, price keeps breaking structure to the upside. So after this break of structure, we can see price rally to the upside and then came back down, okay, to still mitigate this low without breaking this low. So before that, this spike happened during NFP last week Thursday, and the price the market closed, but didn't close above this high. Price didn't close above this high, right? So price didn't close above that high. So this spike calls for concern, because definitely they are trying to build momentum to push the price up, but it didn't close above this up. So what am I trying to say? What I'm trying to say is that trend lines are very powerful confluences we can incorporate in our trades, right? We can incorporate trend line in our trade. Where did I draw that? Okay, I can't find it, but let's draw us another one. So trend line, the one when we have the market rolling up, that is creating higher highs and higher lows, so we can see that um, price is acting like this, making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? So the more the touches, the stronger the trend, especially in an uptrend market. The more the touches, the stronger the trend. So for a downtrend, we have basically the same thing, by making lower lows and lower highs. So this is it: lower lows, lower high, lower lows, lower high, lower lows, lower high, and then lower lows. So the more the touches, the stronger the trend line. So what we should be looking at for here now is, after price came back to this low, broke the structure, came back to this low, then um, printed this bullish candle before this powerful bullish candle, this one here that created this imbalance. So I was looking out for price to come to mitigate this imbalance before it starts moving up. But what did price do? Price didn't do that, right? Price maintained a trend. Price maintained a trend. We can spot that clearly, how price, after creating this bullish engulfing candle, it engulfed the whole of all these candles here. All these candles, this bullish candle engulfed all of them, telling you that bullish momentum after coming into the market. So what are we looking out for? We're looking out for it, how we can actually spot out a trend. So far as price have not broken across this low, across this trend line, that means we are still on a safety zone. So the whole of this area is a safety zone. So price did what? Went up, came down, created came to this trend line, okay, went back up, came to this trend line back, okay, before pushing up again. So what am I trying to emphasize? The more the touches, the stronger the trend line. First of all, we have one touch here. This was the beginning of the story, where price was coming from, and then price came back and touched this trend line again. This is touch 2, and then price also touched this trend line again. This is touch 3. So if you're able to spot out this kind of structure on a higher time frame, then you are good to go. So I was waiting, this my first position, I was waiting for price to come back to fill in this imbalance before moving up, but price didn't do that. Instead, price maintained what? This trend. So what are we trying to look at for? We are trying to look at, after price has made 2 touches. It made the first touch here, it didn't get to the trend line here, so it made the second one here. This is the second touch, and then this is the third touch. So I took an entry from here. From here. So let me show you when I, okay, this was it, okay, when I posted it on my journal. So this was where I entered from, after price has made this first touch, the second touch, and the third touch, right? Price made the third touch here. So after this third touch, I took an entry from here, and I was targeting this area here, 3428. Okay, so why I did this was the high price created during NFP, the spike. So I was saying that I was anticipating for price to take out this high and then retest it before moving up, because clearly we are on an uptrend, right? So this was it. I took this trade. This is 1:58. 1:58, right? I took this trade 1:58, and price smashed TP. You can see clearly that price actually what smashed the whole of this, right? So this was it. Okay, so price smashed TP, and then price did good there. Price did good. So in a nutshell, what I'm trying to say is that whenever you see you spotted the touches, you spotted price moving in an uptrend, try to look for touches. The more the touches, the stronger the trend line. So we can see here we have one touch, this is two touch, this is the third touch. I took my entry from here, and then price continue to maintain the movement, the momentum to the upside. We can also spot the price almost made another touch here, but didn't get to the trend line. So it might not be too perfect, but price definitely is gonna do its thing. So we can see that price maintain this trend, okay, on gold. So we don't have to make trading too complicated. Lines are one of the most powerful in the, tools you can actually incorporate to your trading. Me particularly, I use just the horizontal line, the trend line, and then maybe I can use Fibonacci, maybe just to know the areas you have, the zones you have price likely might react from. So this is what I do. Okay, so basically you try to read price action, okay, just using these tools, the trend line and the what, just the trend line and the horizontal line. That is all. So you can see we have the first touch, the second touch, the third touch. Take your entry. You might not want to take entry from the second touch because it might actually fail. The trend price might do something like this and then like this. Okay, so you want to allow price to touch the trend line, come touch it back, and then before moving up. And then after price did that, after price made the third touch here, you can spot out this engulfing candle. You can, on 1 hour, you can spot out this engulfing candle that engulfed the whole of these red candles. You can see this engulfing candle, this blue candle engulfed all these candles. So basically, if you want to wait for extra confirmation, you might want to wait for an engulfing candle, that will engulf the previous candle. So you can, after the price candle might have closed, you can now bring out your long position and place it here. Okay, then you put your stop loss below the safety line, so, and then target what you want to target. So in a nutshell, in summary, what I'm saying is that the more the touches, the stronger the trend line. Okay, the less the touches, the weaker the trend line. So I waited for 1, 2, the 3 touch. I took my trade from there. Okay, now let me take you to another trade that I took on okay, let me see, let me check my this. Okay, this one is GBP USD. Okay, this is GBP USD. So let's go to GBP USD. And see what price did today. So basically, I keep my trades very simple. Okay, so all right, so we can see okay, just looking at these charts alone, we can see how price was maintaining this demand. Okay, didn't break across this demand. Price was maintaining this demand, though there was small breakout, like a fake breakout here. Okay, but price still spiked to this upside, telling you that bullish pressure is coming into the market. All right, and then if you look very well, you see how price was maintaining something like this. Price was maintaining something like this after price was reacting from this demand on 1 hour time frame. I like using the higher time frame. At least it tells me it gives me the bigger picture of what is happening in the market. So you can see how price was reacting to this trend. Price was reacting to this trend, didn't break across this trend, right below this trend. So, and then we have a support here. So what if you check the upside of, if you check, okay, let's go to 3 hours time frame so that you see what I'm actually saying. All right, we can see the support, the demand. Price was maintaining. Okay, this is the demand, price was maintaining. Price didn't break below this demand, so you can see how price maintained this demand. Okay, so assuming we had a very sharp break below this demand would have turned towards supply. All right, something like this. We have a sharp break like this, and then give us a confirmation. So we can see that this demand would have turned to supply, and then they would have shot it to the nearest demand. All right, so but that didn't happen. Price maintained this demand. Price didn't break below this demand. Then we have a counter trend here like this. Okay, we have a counter trend. So this is a counter trend. Okay, so when we have a counter trend and price is definitely reacting to the counter trend, a break and close or a break and retest of what this counter trend tells us that the bearish momentum is getting weaker. So we might want to look out for buys. Okay, because price definitely broke structure. Okay, price broke structure. This was break of structure, and then price mitigated the nearest supply and then sold. Okay, this is internal structure, and then price continued to maintain this trend line, this counter trend, and then to this demand. So far as price is within this counter trend, like inside this counter trend, the whole of this counter trend, this zone is called a safety zone. All right, the whole of this zone is called a safety zone. So but once price have broke across this safety zone and retested it, then we will say that price is trying to change what trend. Okay, price is trying to change trend. So that was exactly what happened. So price maintained this demand, broke across this counter trend, and closed. That was why I did something like this. Are you seeing? When price close above this counter trend, I took out my long position, placed it. My stop loss is below, is inside the safety zone, and then my target is the nearest supply. My target is the nearest supply because this area here is a supply. We have orders here. They might still shut the market down. So you can see what price did, how the market reacted. You see how it reacted in that area there. So keep it very simple. So what will happen now? What are we expecting GBP USD to do? From looking at this chart now, what I would say is that, okay, this is the counter trend. This is the counter trend that price broke from. Okay, broke out from. So we can see that they might have changed character might have changed. They might want to continue buying. So but we have a supply here, and then price definitely has reacted in this supply. So if we want to continue our buys, what are we going to do? We are going to wait for price to close what above this area. Price have to close above this area and retest it. Okay, something like this, and then we target the next supply zone. Okay, but to be on the safe side, we can just target the nearest possible supply. Okay, target the nearest possible supply around this area here. So that is what we'll be looking at for. You don't continue buying until price have broke and close above this supply. So this supply now automatically becomes a demand for price to continue pushing to the upside, and then definitely we have a maintain of a trend. Okay, we have a maintain of a trend. So definitely price might want to do something like this, react to the trend and then continue pushing to the upside. So price will break across this supply zone. Supply will turn to a demand and price will react and then continue pushing to the upside. So you can see how powerful the trend line is when you have multiple touches. Now I have one touch, this is the second touch. Okay, this is the second touch. You might want to be adjusting the trend line based on what price give to you. So we might have the third touch that will close above this supply zone. So this supply zone automatically becomes a demand. So and then you see price coming back to this another supply. Okay, so that is that for GBP USD. So you can look for your entries, you can take your entries in smaller time frames. So sometimes I use the 1 hour, sometimes I use the 15 minutes to take my entry. So you can see, coming to the 1 hour, we can see how price was able to maintain this trend. Right, we have the first touch here, so this is the second touch and this is the third touch. So price, they might want to come down and retest it, move up. Price definitely, in order for you to continue buying, allow for price to close above this supply. Let the supply becomes a demand so that you can take your buys. So you bring out your long position and then place it here. Then your stop loss should be below the safety zone. Okay, so far as price have not broken below this and target the next possible supply. So far as price have not broken below this trend line, okay, we are good to be looking for buys, right? We are good to be looking for buys. So this within this trend line, lies within this zone, is called the safety zone. This is called the safety zone. So once price have broken below the safety zone, it has invalidated this trend line. So definitely you want to look out for sales. Okay, so that is the logic behind it. So this one was for GBP USD. That was for GBP USD. So we got another one on I think it was let me see, USD JPY. Okay, this one was for USD JPY. Let me see. Sorry about that. Okay, this one was for USD JPY. So we can see clearly how price reacted from this trend. Okay, so reacted here. Price didn't break or close above this trend line. So within this area, within this zone, is called a safety zone. So definitely price is going to the downside. Okay, so let's look at when it has actually dropped. This was when it has actually dropped to the downside. So you can see it's basically the same logic and technique. So if you can incorporate this in your trading, you can see that you are going to make a whole lot of progress. So this video is becoming too long, so I'm going to cut it here after this USD JPY. So we can see technically from this 1 hour time frame, we can see where I drew this trend line from. Okay, so this trend line, you can see where it's coming from. So price was definitely maintaining to the upside, pushing to the upside. Price was pushing to the upside. So price didn't close below this trend line. So within this zone is called a safety zone. All right, so you want to be looking out for buys until you have a break that closes below this trend line before you want to change bias. So this was it. So we had a spike to the downside. Okay, we had a spike to the downside, but price didn't close below this trend line. So we are still safe here. That was why price will continue to buy to the upside. So after price bought to the upside, Then what then happened? They shut the market down and price closed what? Below this what? Price closed below what? This trend. So we want to look at what? For sales, right? We want to look at for sales. So that was why I took out my short position after price closed below this safety zone. So I took out my short position and then placed it and then target the next what possible low. This spike, yeah, price what spiked to previously. So after that, I understood that the market was definitely going towards come downward to the possible demand zone, and then we were having what internal break of structures. This is one of them. Price what broke structure here, okay, came back, and then what then happened? If you pull out your Fibonacci, from the swing high to the swing low, you can see from the swing high to the swing low, you can see that this area, this zone here, is the 61.8 Fibonacci level. So price definitely reacted from that level, from that zone, while maintaining what this trend line, this counter trend. Price was what maintaining this counter trend and then pushing to the downside. That was when I bought out my short position, placed it here, okay, and then targeted the next what possible demand. So you can see how easy it is if you can just use these tools I'm just explained to you, uh, the trend line and the what horizontal line. These just lines. Just incorporate lines into your trading, and you see how your trading will get better and your win rate will what increase. So if you enjoy this video, like and subscribe to my YouTube channel. I'll be dropping more trade reviews as time goes on. Thank you very much.